It's our last edition of Frontier Opening Bell on Frontier Africa Reports this morning. Thank you for joining us. I'm Temple Ashaju. We've got Omotayo Idowu, an oil and gas sector analyst with Greenwich Merchants Bank. Thank you, Omotayo Idowu, for joining us on the show. Luke Ofojebe, team lead for equity research with Hadova Capital Management. Thank you for coming through on the program as well. For others, we do hope they catch up with us on the analysis of these headlines that will be dissecting as we kick off with the program now. We'll take off with the markets indices. We'll look at the Nigerian Stock Exchange, which is down by 40 basis points yesterday. All the markets that we track are basically in the negative yesterday. The BRVM Stock Exchange was flat, 0.01% negative, and the Egyptian Stock Exchange in Cairo was also down by 52 basis points. The Nairobi Stock Exchange in Kenya slipping by 0.39% on Thursday, and the Johannesburg Stock Exchange in South Africa down some 0.85%. We move on now to the Eastern African headlines, where Kenya's Purchasing Managers Index for February 2021 came in lower than that of January. It fell to 50.9 reading in February compared to 53.2 reading in January, and that's on the back of fuel price hike and tax rates that has gone up in that country as well. Kenya's base titanium 6 mine life extension or phase closure trademark East Africa bags 1.38 billion Kenyan shilling from Finland, to support regional trade. Port of Dar es Salaam in Tanzania targets 25 million tons of freight by 2025. PMI is important for the manufacturing space. Luke, let's have you help us to understand this PMI reading in Kenya that slipped to 50.9 reading in February compared to 53.2 in January.
Okay, so unlike Nigeria, the case for Kenya is that anytime we see higher oil prices, we're going to see higher input costs, definitely. And that's what has been playing out in Kenya for some time now. So because of the rally we've seen in oil prices recently, we've seen, input costs significantly. As a result of that, a number of these producers actually passing the higher costs to consumers. And you know how it is in economies, basically. The higher the prices, the lower demand. That's what has been playing out. So we've seen, declining demand from consumers in Kenya, and that has been leading to output from producers. So as a result of that, the PMI has been on a downtrend for some time now. However, we do not think this is going to linger on through 2021. We believe at some point we are going to see stability in prices, given the fact that Brent prices could find its stability around $63 per barrel. When this happens, then we might see a slight recovery in consumer demand going forward.
Right, thanks a great deal. I mean, just like you said, we actually noticed outputs being positive in that country among the key players there. New orders also increased, but we know that the sales declined significantly, and that's the reason why we saw this whole decline in PMI for the period of February. Of course, again, because of the past hike as well as the fuel price. I think there's a bit of market correction there, given the effects of COVID-19 in that country. Bosun Amofaya, executive editor here at Frontier Africa Reports, has actually just joined us. It's good that you're coming in at this point when we are talking about the Eastern African headline, the major bright for the markets. Bosun, would you like to have a go with any of the headlines there? You've got the Kenya's base titanium. We were just talking before you came in. We were talking about the PMI that fell to 50.9 reading in February.
Yes, thank you, Temple, and apologies for coming late. Sometimes the Lagos vehicular thing, I don't know, maybe we got a whole lockdown that we need, by the way, so that like Omotayo and Luke, we can all just work from home, do whatever from home, and just stop moving around. But again, it's all becoming very nasty these days. Then it looks like the whole lockdown, a lot of folks are now getting back to offices, working outdoors since the infestations of virus footprint seems to be not as widespread as everyone thought, and perhaps with the thinking that now at least we've got a vaccine somewhere around the corner, so we might just move on with our lives. I guess that's putting more vehicles, automobiles on the roads, as it were, and all of that. So I guess that's it. So, but again, East Africa is standing out in terms of these numbers. It wasn't a good time in January for, again, that's new tax, that Finance Act that set out the new tax horizon for Kenya. It's one thing that the business community in Kenya have kicked against somewhat. They want the Kenyatta's administration to review it somewhat, as it were. You have a 1% flat tax, whether you're making profit or not. You just pay 1%. As long as you exist as a company, you just pay one tax to Uncle Sam. So, or Uncle Uhuru. I'm not too sure everyone in Kenya is happy with that, as it were. And then you have the whole oil prices high and increasing the fuel prices. That definitely will hurt what you call factory inflation, by the way, and it all goes down to the shelf, to the man on the streets in Kenya.
Very much, Posen, for that contribution. We move on now to the Western African headlines. They've got the Organization of Petroleum Exporting Countries rolling over existing production quota among members. Of course, you're also seeing Brent surging to 5%. The WTI, that's West Texas Intermediate, topping some $63 per barrel. Central Bank of Nigeria extends moratorium on principal intervention monies to next year. Then you have FMDQ admitting Fitson Healthcare, which is a company also listed on the Nigerian Stock Exchange, the 10 billion naira commercial paper issuance. Hadova Plc revenue is up 3.1%, and of course Togo and Shelter Africa, which is a public company there, signed a deal to co-develop some 3,000 units in Lome. Let me hear your thoughts, Omotayo, on these key headlines here. You've got the OPEC story, you've got the central bank story here, and of course, the Hadova company. Give us a go with some of these headlines there.
Okay, thank you very much, Temple. With respect to the OPEC story, I mean, oil prices since economy started recovering due to rollout of vaccines here and there, and signals of growth in various economies in the world, oil prices as well has been seen to experience an uptick. This year it had gotten up to about above 65, dollar per barrel, and hence there was this expectation and speculation by analysts that the meeting that held yesterday, the OPEC ministers meeting, that there was going to be a form of increase in production, for about 0.5 million per barrel. But then at the meeting held yesterday, it was decided, that all countries, all members would retain their current production cuts, except for Russia and Kazakhstan, that were allowed to increase for about 130,000 per barrel and 20,000 per barrel. I mean, and this is due to the peculiarities of their terrain, And the reason behind this is quite innovative, and I mean, it's something that we all can relate to. So the growth that we are seeing in economies in the world, it's currently fragile, is not as strong as it should be, but then it is steady. And so, increasing productions might result to a glut, and that's one of the reasons why the ministers yesterday agreed that production cuts should remain the same. And so, I mean, the next question now is, how does this affect, Nigeria? Yes, and so this is it. There's like a two-way side to it. I mean, it's a good deal when it comes to our foreign revenue. I mean, the budget had projected that or forecasted for a $40 per barrel. I mean, but now that oil prices, I mean, getting to about 67 after the meeting yesterday, it's a win-win. I mean, it means that there's going to be foreign more effects, in our foreign reserves and all of that. Also, the other side to it is when it comes to the hiking for price, that's where the layman feel the burden and the pain. But then, since there is no provision for fuel subsidy in the current
Mm.
budget, so it means that we all as Nigerians have to bear the brunt. It's something that is necessary for the greater future, for the future ahead. And so we are hoping and anticipating that, I mean, with the oil price, the boom in oil price and other forms of, revenue generation from non-oil sector, we expect that the economy will be better, and then even the layman on the street, would feel the impact of these things positively. Then, with respect to the headline on Hadova had a PAT, had increased revenue of about 3.1%. But then when you compare the PAT in 2019 to that of 2020, we can see a decline, and this isn't far-fetched as well. COVID happened was something that affected almost most businesses, and then we particularly, we noticed that there's a decline when it comes to their other incomes. There was a decline when it came to their rental assets and freight costs and all of those things. So that didn't buffer their cost of sales and the other finance costs that they incurred. But then going forward, there's room for growth. As recently, earlier in the year in January, the company had made plans or talked about how they were going to acquire NU Retail and Supply Limited. And NU is quite, I mean, a growing company currently in Nigeria. And so we expect that with the acquisition of NU Oil Capital, that there will be room for growth, plus the recent, I mean, uptick in the market as well. And plus the management, I mean, the management
Right.
seems to be one that are very dedicated. They know what they're doing. They are goal driven, And so we expect that the company will do better in subsequent years. I'll leave the rest for Luke so that you can have something to talk about as well.
Thank you.
Thank you.
Thank you for being fair. So look, she's deferring some for you. I mean, I know you've got Hadova in your basket as well, and FeedSyn has now, as a listed company, has also now joined some of the companies that are beginning to tap the debt capital market. We're beginning to see more of this trend playing out. Give us a sense of what's happening.
So let me just quickly comment on the results of Hadova PLC.
Yeah.
So like Omotayo said, yeah, we saw like some improvement in terms of revenue performance. Revenue increased from about 176 to 181 billion in 2021. So despite the impact of COVID-19, we were able to see that increase, and that was mainly driven by the higher PMS prices we saw in Q3 and Q4, which typically mirrored the improvements we saw in oil prices. But despite the news of a deregulated market for PMS, we didn't really see significant improvement in margins in 2021. So as a result of that, gross profit came in relatively flat at 12 billion. Then Omotayo also mentioned, the decline in other income. So that was mainly due to the absence of asset disposal gains. I mean, last year, in 2019 rather, we could all recall that Hadova Plc sold its businesses in Ghana, its power-based business in Nigeria, that's the Gereju power plant, and also sold its upstream business. So as a result of that, the company was able to record, gains from asset disposal worth about 3 billion, and that was what really supported their bottom line last year. So if you stripped out that from their 2019 performance, you will likely have seen an improvement in their PAT. Then in terms of dividend, the company declared a dividend, or a final dividend of 19 kobo per share. Yes, that might not seem impressive, given that it only equates to a dividend yield of about 1%. But I think, in my view, it's actually an improvement compared to 2019 levels. Yes, we understand that dividend declared in 2019 was much higher than that of 2020, but 2019 dividend was actually a special dividend because it was derived from the gains obtained from asset disposal. Thank you.
Thanks a great deal, Luke, for these comments. Bosin, any contribution, or would you just move on to the Southern African markets?
Just to quickly speak to the Shelter Afrique and what they are doing with, which is based in Kenya. Nigeria is a major shareholder in this housing real estate company, financing company. Is one good story. And, you know, I keep warning everybody, and especially Nigeria, keep an eye on your neighbors. Don't undermine them. The days of thinking that Togo, Benin, Cameroon, whatever, are just your backwaters where you just you can just run over. It's a very big, you're making big economic mistake. 3,000 units of low-cost housing. Look, they're looking at us. They're looking at our foibles and our fault lines as a giant, and they're going to take our lunch. If we're not careful, they'll take dinner as well from Nigeria. The way they are going. Togo's done a Eurobond, Ivory Coast is done, Republic of Benin is done. They are getting support fast and furious from France. So the LSE Palace is keeping an eye. They are not making, we see, a few years ago when Morocco moved to join ECOWAS, Fox didn't see they couldn't see the handwriting on the wall. We were just fighting newspaper noise online, whatever. Look, these guys are here to stay. With Brexit done and UK out of Europe, France is the king of Europe right now. And they're going to muzzle in anything and anywhere they can. They've dealt with us massively with rice, poultry, chicken, whatever imports through Benin and Togo. And they are building these small countries in our backyard that one day you'll be surprised the economic strength of these countries. So keep an eye on them, and I'll repeat, keep a permanent eye on these neighbors. And don't forget, by the way, Nigeria is surrounded entirely, aside from the Atlantic Ocean, by French-speaking countries, from Cameroon to Chad to Niger to Benin Republic, all the way down. So if I hope the folks in Abuja, they know exactly what I'm talking about.
Nigeria remains the giant of Africa, as they say. Let's check out
Thank God it's Friday, Temple. Let's just take that as a TGIF. Go ahead.
TGIF. I agree with you. Checking in with the headlines in the Southern African space, about some time looking to commence digital insurance. First round reporting 21% appreciation in profit. Zimbabwe relying on the lower inflation, stability in FX, with an outlook for manufacturing sector at 61%. Bosin, I'll come to you quickly before getting the perspectives of Luke on this.
Yes, I know Temple would want to speak to Zimbabwe, but again, like I said, I keep warning everyone. You see, even with 3 years to 4 years since the ouster of Muammar Gaddafi in Libya still has one of the highest GDP per capita on the African continent today. They just restarted their oil production last year, even with the pandemic, and they have about 7 to 11 oil fields, export fields being done. You'll be surprised how these folks will rebuild from within and they will relaunch. Now, that is the story I'm talking about Zimbabwe. I've had television interviews with a number of these folks in Zimbabwe, at least once in every 2 weeks. And what I'm hearing on the ground is not some of what you see in the international news media. So I tell people, keep your eyes locally and see what is going on. Zimbabwe has been able to compress its inflation from around 800% to about 300+% right now, okay? Last year, they opened the new foreign exchange auction market, a daily auction market that is working. And you'll be pleasantly surprised the exchange rate right now. So the folks in Harare are getting a lot of things right. And we just need, now look at this manufacturing industrial output. Look at the Zimbabwe stock market index. The index that gives you a good reading there is the Zimbabwe Industrial Index on the Zimbabwe Stock Exchange. It's nearly almost every day in the positive reading because the industrial production is moving. And look at what the Confederation of Businesses in Zimbabwe said. Look, the outlook for this is about 60-61%. What? Give me an outlook on capacity utilization for Nigerian manufacturers from Association of Nigeria. You're not going to get 50%. So how would Zimbabwe, with inflation around 380-350%, be able to do it? So keep an eye on these guys. Now look at Sudan, for example. They just float their current foreign exchange. They set a new band, this and that. Zimbabwe went for a new currency. They disjointed. They just removed this US dollar and just moved on. We need to take hard policies, very hard grinding policies in Nigeria, and that's what we're going to get us there.
Thank you very much, Bosun. Luke, does that sound like something that Nigeria is already doing as well?
Sorry, I didn't get what you just said.
But does the rates harmonization and liberalization look like something that Nigeria is currently doing as well, and something that will favor the manufacturing sector of Nigeria?
So yeah, when it comes to Nigeria, I mean, there are peculiar issues that we need to address, and on the forefront of that is infrastructure deficits. I mean, for now, you look at what the challenges these manufacturers are facing as regards the importation of goods into the country. Currently, it's cost more to transport goods from the Apapa ports to the various warehouses we have in Nigeria compared to the actual cost of bringing these goods into the country. So that's one. Then you still have the issues with foreign exchange, really. The supply of dollars in the country is still a bit limited because the CBN is trying to, manage FX rates, so trying to ration the supply of FX within the country. So that has also been limiting the ability of these manufacturers to bring in more raw materials as needed that can actually meet daily demand. So that's one. The second one also is that even though we've seen, like in the last 5 years, we've seen like an average growth of about 1.2, 1.5% in Nigeria's GDP. Contrary to that, GDP per capita itself has been declining because we've seen a higher growth in population. So what that means is that disposable income has also been shrinking as a result of this. So demand from consumers is also declining. So in terms of what the Nigerian government needs to do to address all these issues, is one is having a favorable environment for investors that are ready to invest for the long time. That's the FDIs basically. Currently, the environment is actually harsh. We've seen policies from the government in the last 2-3 years. We've seen it in the oil and gas sector, higher royalty charges all of a sudden. We've seen now the government has dealt with MTN within the last 4 to 5 years. We've seen the ban on, the new companies that started this logistics, motorbike logistics and all that. So, I mean, all these things all together send negative signals to potential investors that might be interested in the market, because at the end of the day, capital flies to where it can find the best hospitality. And right now, to what other African countries can give to these foreign investors, I mean, Nigeria is really nowhere to be found. And we've seen it play out in most of the sectors. The number of textile industry companies in Nigeria has dropped from as high as 125 to 25 within the last 2 decades.
So basically, the sector has a serious challenge from other markets.
Clearly. So the government needs to address the issue of environment, making it friendly for investors, keeping the exchange rates relatively stable, to keep the inflow of raw materials into the country.
All right, so we're running out of time. I apologize. I just have to quickly cut in there for the sake of time. Let's finish off quickly with Northern African headlines. I'll get Omotayo to help us speak to just one of them. That will be perhaps the music streaming platform Angami Incorporated planning an Egyptian expansion. I mean, we haven't been saying this. We've been saying this over and over again. It's a challenge to a lot of the startups. None of them has been listed in the African stock market or capital market. What do you think of this, or what's your take?
Okay, so thank you, Temple. Taking a cue from where Luke left off, I mean, one of the major issues in Africa, on developing countries, largely is the instability that foreign investors they see. And everybody wants stability, some sort of certainty as to certain things. And so, as Luke had highlighted, there's a lot of, in one day the policy is like this, and then the next minute, they are changing it, and so that has communicated, sort of a drift back, for investors. And so what we expect that going forward, things will change. There's, aside from Agami, I know that there's speculation that Spotify as well, their services will be made available in Nigeria and other African countries. And so hopefully, they get to list as well, not just in terms of their services, but then in terms of their portfolio as well. Thank you.
And perhaps the stock exchanges need to learn how to attract some of these startup companies, especially the tech startups, because none of them has been listed in Africa at all. Bosun, your final thoughts on this?
My final thought was that, I'm sorry, with due respect, where is the stock exchange when the whole national theater issue was being discussed with Mr. President and the central bank, by the way? Look, just hold the central bank governor on the left hand and hold Oscar Onyema on the right hand, and take both of them to the national theater, and just talk about 20-50 billion investment. You can put that rest of the stock exchange. That is a prime real estate in Lagos State with Babajide Sanwo-Olu following them behind. 4 of them. Yeah, you have a done deal. Look, the national theater, just put it on the stock exchange, and that's a prime real estate. Luke is smiling. He knows where the money is. He can smell money a million miles away. Omotayo is the same thing from Greenwich Merchant. Temple, it's only you and I that are journalists. We don't know where to find money. Our job is to find news. They can smell it. If you bring national theater to the market today, you'll be surprised the level of the artists, the music board, whatever, that will stream to the Nigerian stock exchange. But it's never too late, by the way, to talk to Ivy Mokwede, the rest of them in Access Bank and others, and talk to Godwin Emefiele, have a lunch somewhere in the Kogi Club and say, look, can we be part of this party? Bring the national theater to the market, bring the TBS to the market. These are prime real estate. By now, Oscar Onyema and Babajide Sanwo-Olu, Lagos State Governor, should be on the call 24/7. Follow the money. If you bring those 2 prime estates to, look, what am I talking about?
I agree with you, boss, and thanks a great deal for these analysis. Thank you for your final words, Omotayo, and of course, Luke Ofojebe from Festival Capital Management. Thanks a great deal for your perspectives on the show this morning. Omotayo, oil and gas analyst with Greenwich Merchant Bank. Appreciate your thoughts. Sonomo for you. Thank you for making it. Eventually, he's our executive editor here at Frontier Africa. Have yourself a wonderful weekend. This has been Frontier Opening Bell, the very last edition for this week. I'm Temple Mashaji. I'll see you next time.